So as the president inserts himself into this energy process, there will, of course, be winners and losers. But figuring out the companies that may benefit depends a lot on what happens, also the fine print. Your next guest has done some work on exactly that in a new note published overnight. Joining us is Chad Dillard. He is senior analyst at Bernstein. Chad, welcome. Listen, here's the thing. PJM runs the grid. Like the electricity we're getting right now, you may be getting wherever you are sitting. If you're a data center operator, you want your own power. Build a power plant. Don't even deal with the grid. Build your own thing. Have your own plant. That's a risk to the grid, but is that a good thing for a name like a Caterpillar?
Yeah, definitely. And thanks for having me on. So our call going into 26 is that power would actually be politicized. Power prices are up pretty massively. The states that see a lot of data center construction are actually leading that increase. Voters are upset, and this issue got some traction in the November elections. And in 26, we see the midterm elections. So it's no surprise that politicians need to respond. And with 1/3 of all data center construction located in the PJM, this is ground zero here. And my view is that this announcement actually is a positive for the overall electrical space. So 15-year contracts, will unlock about $15 billion worth of new power plant construction. You're ring-fencing a lot of the consumer power inflation concerns. But the thing is, there's a contrarian way to look at this. Does this actually push hyperscalers more towards on-site generation? Because at the end of the day, the take-or-pay contracts reduce flexibility for hyperscalers. And so if you're being forced to underwrite power plants, why not just control them? And that feeds into the whole idea of Caterpillar.
That's what I was getting at in the intro. And my first question to you, Chad, was why deal with the grid at all? Why deal with the political blowback? And if you're a data center operator, you can say, well, we didn't have anything to do with your power bills going up because we actually aren't on the grid and have nothing to do with the overall power system. We have our own little power plant. Assuming more of that is happening, it will happen. I know that. You know that. Who wins? What stocks win?
Yeah, so if you're doing on-site generation, probably the biggest winner is Caterpillar. So they manufacture both reciprocating engines and smaller scale turbines that actually powers that local grid. Other companies that tend to win are some of the power management companies. So when you're bringing power closer to within your four walls, the complexity of power management goes up. And so there are companies like Eaton, as well as Hubbell. There are companies like Legence, which does a lot of the mechanical, electrical engineering and installation. So those are some of the companies that win on top of Quanta Services.
Yeah, Quanta would be a loser if that were the case, wouldn't it? Because they build power lines for power grids.
Well, so they build power lines. So they would still see more growth at the end of the day. It would be more ideal if they actually saw more transmission lines get built, but they still do have this type of work where they actually build out the physical infrastructure and the equipment, the electrical equipment there. So they're less of a winner is how I characterize it.